So this, as you can see, is uh, the the Bitcoin chart, and I'm gonna explore the things I mentioned there yesterday uh, on on the fact that volume might not be as clear as well, while actually selecting into the right path while FPG and OVs are swept. So in this scenario, the things that have happened, I'm not going to. So this is invalid. We're going to target what is going to happen in the next price momentum. So at this moment, we can look into this price action and say that this is kind of in a resistance, but it's breaking out. It's the opportunity area, because we are seeing the price break out of a key range zone for a few days, and that has been confirmed through this bar, and price is starting to move on. So this is expected to. So we are expecting price to either get rejected severely in this OB, or actually breaking out with a slight leaning towards the breakout portion. So we are expecting the PG and OB to be swept in this case, right? So while expecting that, when we move forward, as the price action move forwards, we are seeing the rejection being there, and the price trying to form some sort of an initial rejection, and there is a big rejection, uh, but that is turning into some sort of a consolidation move, and the price is starting to move actually downwards. So another OB is coming in, another APG is coming in at the moment, but then the price starts to hold to the bottom OB, and then explosively breaks out. So at this point, what we are seeing is that the initial move from the OB and AVG were accurate, and it was going uh, down. So, but then it got supported and started moving on and swept the VG and OB. Uh, and now if we look at the volume aspect of it all, let's zoom in a bit. So in the initial breakout, the volume was higher. The price could not break out. The second, so let's fast forward the price a little bit more so that we have an idea where the price is going on. So So the price actually blew through the roof. So this is Wednesday, day after the election. So in the initial breakout, the volume was higher, uh, not the average volume. The volume was higher, but in the next move, actually, the volume was lower. Still, the explosive move came on better than this, and that creates, obviously, because it was breaking out, that is going to create additional volume as well. But if we look at it, it's the same scenario, the volume dropping in this scenario as well, volume dropping quite a bit after this, and the next bar obviously much lower volume as well. So this is 30-minute bars. So as we can clearly see, that the volume is not at as reliable an indicator as we would think, because this point was volume higher, volume was also starting to rise, the same thing here, and a different reaction altogether after the confirmation of that level. What s- they meant by structure as well, confluence, and I mentioned as well. So when the price was breaking down, our initial reaction to this was bullish, as it was breaking out of the that move. We had decent volume as well. We have had a decent continuing trend as well. So when this is happening, this bar is holding this low end, and then the next bar is holding to that end. So the midpoint of that APG around this point gives us some sort of a loose entry with the basis of the bias, with the basis of the market structure, and the basis of this low as well. So when we want to risk it, we want to take some sort of a trade on the basis of our confluence as well. This could be a great indicator, a great entry point with a small SL around this position, and leaving this as a target, the top one, and the bottom of the initial uh, rejection, yeah, as the SL. So this bar low would be our SL, the midpoint of the FVG, and the stop and close to that bottom as well would be our entry point, and we would target the top. So this is a very small kind of trade with only 2% target and say 6-4% or so SL. What this could turn into is when the price actually moves higher, which is uh, around, let's say, this target. So the price is, let's say, here in this bar closer. We are here at this point. We could set the star exit here and put the SL below the current last low point of the market structure, which is around here, which is this bar low. So this bar's low would become a new SL, and this would turn into a different trade. That is following the market structure, and this would keep us. So as the price moves on higher, we would keep increasing, decreasing our SL according to that market structure. So let's say we have no reason to have change our market structure yet. So now, yeah, we are facing resistance. So let's say our entry point has moved. Sorry, let it stop. So uh, we are facing resistance, and our entry point has moved here. In this case, let's say we have this. We have formed a new market structure, uh, and we would turn our SL into this level, the bar low of this bar, uh, and RSL would be hit at this bar. So this is where we would exit our trade, actual trade that was created here. So that's the idea of the market structure. They are these ICT people. They follow a lot. It's not very straightforward in all situations. It's very like case to case basis. Price action is going to be different in almost every case. But that's, I think, yeah, most the gist of it. Yeah, let me know if there is any questions. Thank you.